Let's look at the live trade results on Wednesday, July 28th. Yesterday, July 27th was a strong down day with all the major indices Dow Jones, S&P, and Russell 200, and more importantly, NDX was in the red. We were quick to take advantage of this increased implied volatility to make some nice profits. I think of options trading like a sniper. We strike only when the opportunity presents itself and we are in the best possible position to make significant progress with the least risk. Not only do I believe in making strategic trades, but doing so with lesser risk. This is called the Sharpe ratio, which accounts for the gains relative to the risk we undertake. The higher the Sharpe ratio, the better the portfolio is positioned for gains. It is easy for anyone to take a massive amount of risk to gain a small amount and show that. But to do that consistently and beat the market, with lesser risk than the market, is what differentiates the pro traders from someone shooting in the dark. We will talk about our gains in the NDX in this video as well. If you are part of our group, you clearly were expecting the downward move given the NDX was way overpriced. We had several events impacting the market this week, including the Fed FOMC meeting, the big tech earnings on Apple, Google, Amazon, and Tesla. Now, keeping these market conditions in mind, how do we benefit from this and be able to trade profitably? To begin with, such days are really the best days for us, as the implied volatility of the VIX, which has been languishing in the 15 range for some time now, has gone up quite nicely. Let's look at our alerts for NDX 0 DTE. Today, we sold a call credit spread and put a put credit spread, making it a full iron condor. This, you can see, right now is nicely in the green. This has returned almost $12,500 in profit on an investment of around $50K. I know this was a big position, but we were already at an all-time high and moving higher. All the big tech earnings were completely shattering expectations, yet the NDX was not showing much strength. We were clearly outside the 2 standard deviation Bollinger Band, expected move, and a further move higher was very unlikely. This turned out to be a great choice as we see that we had a max gain on these credit spreads. A question for the viewers: how much was the gain on a 14,600, 14,500 put and the 15,200, 15,300 call included? Please take a look at the comments here in the description down below. If you guessed a $540 gain on the 14,600, 14,500 put and a $1,500 gain on the 15,200, 15,300 calls, then you are absolutely right. We have another 2 DTE trade on the NDX calls due to the overextension shown here. We will look into how it progresses tomorrow and update the channel. Today, let's look at the live trades taken in our 0 DTE channel in our trading room and how they have performed. As we've stated in previous videos, we feel that the NDX is overextended due to 2 main reasons. 1. All the tech giants reported huge earnings, completely smashing expectations, yet the index barely moved any higher. This signaled that the market had mostly directed this news and the current price reflects this earning. 2. We are already outside the 2 standard deviation move on the NDX, which is a very rare occurrence and signals a reversion to the mean in the short term, even if the longer term trend still remains intact. We always have a bias in mind. Let the market give clues confirming our bias and then strategically enter the trades when the market gives us the best opportunity. In today's case of the NDX, the higher IV gave us a good entry on the puts with some nice premium capture. We always sell into strength and always enter at delta around 13. All of our trades are based on a solid back-tested data and use solid fundamental and technical analysis to underline our trading ideas. Here, I would like to focus on the gains on our 0 DTE, and I will come up with another video on the bonus trades that you see on the screen. We have SPX and NDX for our 0 free trades, taking advantage of the higher IV during the day. To summarize, we have had quite a successful run on the 0 DTE trades. I'm not saying this to brag, but just evaluating the positions based on how they performed over time. Our last loss was on March 5th, 2021, and since then, gains have far outweighed the losses. We have now been able to exit most of our positions at a nice gain. Please feel free to reach out to me for more questions.